at we were looking at you just plotted a higher high, higher low diagram.
Oh, we're looking at the
when
change
the
of
market
trend.
was about to reverse.
Oh, we looked at the
Yes.
reversal, and previously we looked at a trend changing from bearish to bullish.
Yes.
So should we, do you think we can still look, have another example for a bearish trend, bullish to bearish?
No, we can move on to another thing.
We can move on, which means you're quite sure you can do it on the other side. Okay, these are the topics that we see. We looked at support and resistance. And you probably know how to draw your support, your major support, your major key zones on daily.
Yes, I do.
And also when you scale onto the mid time frame, let's say there is smaller time frame, H4, H1, you still remember how you can plot the BMS, the break-off structure.
Yes, I do.
Meaning on the lowest time frame, like 5 or 15 minutes, that's where you find entries. And for a retail trader, entries are based on different ways. You can still find entries using candlestick patterns, or you can still find entries using chart patterns.
Okay.
And also a Fibonacci can also give you an entry. Yeah, confirmations for retail trading, they are simple. We always confirm with the candles after following the signal candle, because we have to first get the signal candle for a retail trader to confirm an entry. A signal candle, then confirmation, it's always the next candle closing above or below the signal candle, depending on the direction of the trend you're trading. So we were looking at order block trading. That's what we were looking at previously. How a trend manages to change from bearish to bullish, vice versa. And we looked at how a chalk, a change of character, come to be formed. So which pair can we look at? I don't know. What do you want to know within the order block trading? Because we probably looked at entries that wherever we're buying, we always have to buy within areas of discount. And wherever we're selling on the bearish trend, we always sell within the areas of premium. And on the Fibonacci, you can simply see those zones plotted on the Fibonacci. Below and above equilibrium, which is 50.0, yes. So what can we possibly look at?
Basically, I was just doing some exercises.
Yes.
And then, for example, I will just minimize your screen. Let me see if I can.
Okay.
Just hold on a sec.
Sure.
I'm just gonna give you one pair.
Okay.
Which yeah, let's check AUDJPY.
AUDJPY. AUDJPY. Yes. All right. That's a cross pair, right?
So yes. So the overall trend is bias. And then when you go to 4 hour, just hold on a sec.
Okay.
Okay, actually now the chalk has been broken. So now the trend is going down. But when you look at the trend, if you zoom in and zoom in and zoom in, basically the entire trend is buying. Ne? But when
Okay.
you look closely, you can see that there is a choke already that is there, ne?
Okay.
On a daily time frame. And then when you go to 1 hour, you can see definitely this cross pair is trading within a range of some sort.
Okay, so you're gonna
Ne?
come again, because I've been just trying to set the same pair that you're trying to explain to me. AUDJPY. Okay, we started. You started explaining from the overall trend is what?
The overall trend is going to sell because the choke has been broken.
Okay, the
Or
overall
confirmed.
the overall trend you see. Okay, it's likely to sell, and the choke has been broken. Which time frame are you looking at?
Daily.
Okay, you're looking at daily. So the daily choke has been confirmed, right? That's what you are trying to say.
Yes. So
Okay.
can we conclude? Can we? Okay. Just correct me. Ne?
Okay, go ahead and explain to me.
Yeah, high level. When you look at this trend, when I draw the trend line, it is
Yes.
buying.
Yes, it was
Right.
buying. Yes.
It is buying.
Mm.
But I can see that the choke has been broken already.
Has been confirmed. You can see. You can
Confirmed.
still see. Yes.
Yes. Ne?
We're still on daily, right?
Yes, still on daily.
Okay.
So can we conclude that this trend is still buying?
This
I
trend.
mean, it is selling.
This trend is just confirming a sell. Since the choke, we can see the daily choke, the confirmation of the daily choke is visible. So
Yes.
it's just confirming a sell with this retracement that you see. Can you see my chart?
Let me just.
Or I should, I don't know.
So open your chart. Yeah.
Hope we
Yeah, I
together.
can see your screen now.
Hope we
Yes,
together.
yes, I'm here.
You're talking of the choke being confirmed. You can easily see a choke on daily, right? Of which I'm going to mark. I'm marking exactly what you're trying to explain. You say you can possibly see a choke on daily because the previous higher low has got taken out. We had our first break of structure on daily, of which we call a choke, right? So the current buy that you see is there. It's always a retracement. Wherever we have a break of structure, wherever there's any break of structure, we should expect a retracement to confirm an entry, whether it's buying or selling. So it's confirming a sell. You are right. It's confirming a sell, but it's not yet selling. It's just confirming a sell with a retracement.
Okay, so can we conclude that this trend is buying currently? Can you say that is the case?
This trend was buying. It's preparing to sell. So currently it is buying. You can say it's buying currently because it's in a process of confirming and a sell entry with a retracement.
Okay.
Yes.
Then can we go on 4 hours?
Okay, this is 4 hours. Yes. This is
so
4
on 4
hours.
hours, yes, on 4 hours, we can see that this is selling. A reason why I'm saying that, okay, there is a I don't know if maybe I can say it is some sort of a funnel or a channel. If you want to really trade these, because now the trend is not stable, that much stable. Then can you just draw a line like portraying a channel or a funnel or a cone?
Okay, this is what you're saying.
Yes, this is what I'm seeing.
Okay.
And with this now going to retail, I'm expecting the price to drop below, right? If it touches and then goes back, it's fine, but we can still trade this. Then if we can go to 15 minutes.
Okay, let's go to 15 minutes. Before we go to 15 minutes, like we what we're saying on 4 hours before we go to 15 minutes. Okay. So you were trying to tell me that the trend is still trending within the channel, because obviously we have what we call an AVG here.
Yes.
And this AVG is actually the imbalance which was left behind, of which we're hoping for price to first confirm with a buy, to confirm a sell by balancing up the price, by buying to sell in order to balance up this AVG, because this is the imbalance that we have, right? So we're hoping to first fill up the imbalance before we think of what? Selling off. So let's go to 15 to confirm a buy entry, because now we're preparing to buy, right? Because on 4 hour, we're preparing to trade the retracement leg. And the retracement leg, we're having some liquidity up here. The equal eye. You can see the equal eye. I'm going to put the trend lines there so that you can see. We have to take out this liquidity first. You see the liquidity that I've marked here? Let me just mark it with the sign of the dollar so that you can possibly see. So these are the equal eyes that we have, and we have above the equal eye, we still have the imbalance of the AVG fair value gap. So we're hoping to target the equal eyes first. We take out the equal eyes in order to be able to fill up the AVG, tapping this order block within supply. Then we're gonna also think about selling off, because we still have some good liquidity, trendline liquidity below, which was created by the channel. You can see we still have another liquidity here. This is liquidity, trendline liquidity. If I can do like this, whatever you see here, this trend line, this buying is creating, leaving out liquidity, which is actually we call trend line liquidity. And another thing here, we have the equal eye. This is a high, this is a high. We're hoping to take it out, filling the void, tapping into the void, making sure we mitigate the order block so that we can sell. The time we're gonna be selling, we'll be aiming now for the trend line liquidity. So according to what you see in a channel, you're hoping price to respect a channel, right? Because it's now gonna tap on the trend line of the channel. That's what we're expecting. So the reason we're going on 15 minutes, okay, I'm on 15 minutes. What were you trying to tell me on 15 minutes?
Okay, can I go to 1 hour maybe first?
1 hour. Yes, we are on 1 hour. Let me yes, this is 1 hour. Okay, we are on 1 hour. I've literally
okay. How can we possible trade this move?
How can we do what? Come again. How can we do what? Come again, doctor. You can repeat the question.
Possibly trade this channel, because the market didn't give us really chance trade this channel.
Okay.
Pardon?
What are you saying? I didn't get
this
you.
Move.
What are you downward move, yeah? Come again. What are you trying to say? I didn't hear anything. I didn't hear anything. What are you trying to say? Come again. Maybe network.
I'm saying I want to see how we could have.
Continue.
I'm saying how can we have possibly traded this move if we can go to 15 minutes?
Okay, on 15 minutes.
No. This is the question.
Yes. Repeat your question.
Yes, how could we have had traded this move if we can go to 15 minutes time frame?
The move which is selling.
Yes.
Okay, so we're gonna, how were we supposed to trade this 15 minutes move, which was selling?
Yes.
So previously the trend was buying.
Because yeah.
So we have to first mark the break of
Yes, it was
structure
buying.
previously. You see what I'm marking on 15? Previously, you had to make the break of structure that you saw, because previously the trend was bullish, right?
Yes.
So it's the same thing that we do on higher time frame. Wherever we're confirming an entry, we always have to confirm a change of character, either on smaller time frame or higher time frame. So it's the same thing we're gonna do. You see the last break of structure. Let me literally mark them so that you can possibly be able to see.
Yeah, you can just mark the last one at the top.
Okay, they mark the last one. Okay, it's fine.
The rest is fine. Yeah.
Okay, I'm marking the last one, BMS. So how can you possibly see that the trend is changing from bullish to bearish? Tell me. Because this is all,
yeah, there is a choke there.
When the trend takes out the what? The previous what?
Low.
The previous higher low. Because higher low, we've been on bullish trend, you can see. When price takes out the previous what?
Higher low.
Yes, that's the same thing we do. That's what we call the confirmation. And when price takes it out, we're gonna see our first break of structure, and we're gonna create a what? A lower low, of which is here. Now we're confirming, we've confirmed the bearish trend because we're able to get our new lower low on the opposite direction of the trend. You see the lower low? Hello? Do you see the lower low after the break of structure?
Yes, I can see it.
So meaning wherever we have a break of structure, this is the one we call a choke. Wherever price break structure, you always know, we always expect price to retrace back. This retracement is the one which confirms your entry. It's the one you use, and it always retraces back to the order block, which is within the area where you're hoping to buy from. We always have to look for that area of retracement. That's where we have to make sure that there's an order block, of which you see. Let me just remove this arrow. Do you see this order block? This is a bearish order block, the last green candle before the break of structure, which is a choke. So you were not supposed to enter aggressively at the first break of structure. You always have to wait the price to break structure first. To confirm a choke, to create a choke, always wait, be patient enough for price to confirm a choke. After, when you've seen that there's a choke confirmed, expect a confirmation entry. Of course, you're gonna be waiting for the retracement towards your area of premium, because since now we're selling, we're hoping to sell, we would expect a price to come back within the area of premium. For this case, let me put a Fibonacci. And I see. You see our Fibonacci? It respected, it came back exactly to the area of what? Did you see where the retracement tapped? Above equilibrium, above 50. You can see even the last week.
Yes.
So this is the order block which was lying within that area, but the order block is within the area of equilibrium. So most cases, equilibrium, this is the starting point of premium pricing and discount pricing. So this order block, it came to be valid because we can still also sell at 50. Yes, this is the order block which was aligning that area where price stopped. But price came within the premium area above 50.0. So there was an order block of which we used to place orders. The smart money used the same order block to stack more orders. So it's the same order block we were also supposed to use to put in some sales. That's how we confirm sell entries. This is what we call confirmation entries. When you wait for the retracement to tap your area of interest or point of interest, then you start selling. Yes. So
and also if we can also go to retail, I can see that there is a bearish engulfing that happened there.
This one, yes, there's a bearish engulfing of which we saw this one. You can see, yes.
Yes.
So your confirmation will be, where will be your confirmation? What will be your confirmation candle?
The second one.
The second one. So you would literally enter after this second candle closes. You enter a sell. Yes, that's a confirmation entry for retail traders. But this is clear for you.
Yeah, it is clear.
Just a bit of practice. Sorry?
Yeah. No. Also, I was just saying that it was a bit confusing when I had to place my Fibonacci.
Yes.
Yeah, but now I see it very clearly. The point of now that the price has to go above the equilibrium, touch the point, and then yes, it did respect that because it went through the order block and then touched there, and then from there it came down.
So meaning this is what we call a confirmation entry on lower time frame. Yes. It's the same thing we do on higher time frame. We happen to see the change of character. That's a chalk. Then a retracement. Then we mark our higher time frame order block. So we still have to come to the lower time frame to refine, to look for the smaller order block within that area. So meaning we're still looking for another order block, a smaller one. We still have to look for the chalk, break of structure, retracement, we confirm, and then we sell. That's what we call order block refinery. You cannot use the bigger order block, because if you use the bigger order block, your stop loss is gonna be too wide. Because if you were to sell here, your stop loss was going to be above these weeks of this order block where you sold from, right?
Yes.
And on 1 hour, let's go on maybe 4 hours or 1 hour. 1 hour, if you're to sell here, your stop loss is gonna be too wide. It's gonna be what? Above this order block where you sold. This is the only order block we have on. So the advantage of making entries on the lower time frame, you're running away from wide stop losses. So you actually you're taking a big risk to reward. Your risk is so big and your reward is what? Your reward is small. So on the smaller time frame, your risk is so small because your stop loss is narrow, and your reward happens to be big. Yes. So risk to reward ratio, that depends on order block refinery. So that's the topic on its own, order block refinery. I think you have to first master supply and demand or order block trading, so that we can also look at the order block refinery. That's where now we're able to do super confirmation entries on lower time frames. So anything we can look at.
Come again?
Anything we can still look at, my brother.
So that one is out. So I just want to check, because sometimes the market, they don't really give you what you're looking for.
The first setup, yes. You never
Yes, the perfect setups.
Yeah.
So we just have to also, deep dive to see if there are any opportunities. But if there are no opportunities, then you stay away.
Yeah, you stay away. If there is no opportunity, you look for another pair which can give you a setup. You shouldn't run after a price which has left you, or a price which didn't come back to your area you've been waiting for. I mean, yes.
So meaning that you have to look like in more.
Doctor.
More.
Dr. T, hold on just a minute. I'm coming back online.
Okay.
Don't go. Okay, doctor, let's continue. Okay.
Okay.
All right.
Okay. Yeah. So what was the question? So we construct a Fibonacci on what? On chalk or on boss?
Okay. Let's do this, ne? It's better maybe let me clear everything here. Let me clear everything here. So let's go to so that we can be able to construct our chalk first on the same pair. Do you see our chalk where the trend changed from bullish to bearish?
From bullish to bearish. Yes, I can see.
Where?
Yes.
Is it here?
Yes, currently, yeah, that is where it changed.
Exactly. So this was our chalk. Let me just give you a nice, yeah, okay. This is our chalk, and this was our expansion. It's expansion leg, right? Previously, this was a bullish trend. It was buying, as you see. Now we have 10 minutes left. So as we see previously, this was our bullish trend, and this was our previous what? Higher low, which got taken out. It's the reason why we started now seeing the trend turning bearish. So we're gonna try to fit the Fibonacci. Wherever we're fitting the Fibonacci, which side do we start from? Stretching. If now we're aiming to sell.
From top to bottom.
Exactly. This is the fib. So you can possibly tell areas of what? Premium and areas of what? Discount, right? So which areas are we looking for in order to sell? Because we're aiming to sell off.
Between 50 and 0.
So those are areas of premium. So we're gonna possibly be marking the order block, which we can see between those areas, between 50 and what? There are a couple of order block. Even this is the order block. We're marking off the bearish order block. Those are the bullish candles. Within the area of what? Premium. Above what? You see, we have a couple of order blocks here. Do you see?
Yes.
What matters? It depends on which order block price chooses to mitigate, to respect. And wherever price respect that particular order block, that order block becomes our valid what? Order block, where we could possibly sell from.
Okay.
And wherever you see price around the same order block is reacting to that order block, for example, that's when now you come to the lower time frame, 15 minutes. It's the same thing that we looked at. 15 minutes, you're gonna be able, for example, prices are the order block. This is the area of the order block. Let's say this was our order block we saw on 1 hour. We now on 15 minutes. It's the same thing we looked at. We still have to wait for the chalk. You see? For the chop, break off structure, and we wait for the retracement to confirm our what? Our entry.
Entry.
Yes. So that is all. I think we've run out of minutes. I'm gonna send you another link, bruh.
Okay.
Yes. Yeah, basically, let me send you another.